Welcome back to Bull vs. Bear, the podcast where finance meets bold perspectives. I'm Kleven, your ever optimistic bull.
And I'm Chip, the realist, or as Kleven likes to call me, the skeptical bear.
Today, we're shooting for the stars, literally. We're diving into the world of space exploration and technology, looking at three key players in the rapidly growing industry: Redwire, Intuitive Machines, and Rocket Lab.
These aren't just sci-fi dreams anymore, apparently. These companies are real players shaping the future of space, but are they worth your investment dollars?
As always, I'll be making the case for why these companies have the potential to skyrocket, pun intended, while Chip will bring his grounded perspective.
Grounded and realistic, Kleven will break down their business models, growth potential, and whether these companies are on a collision course with profitability or a financial black hole.
So buckle up. Today's episode is going to be out of this world.
Let's launch into it.
All right, space puns past us. Um, what has happened for you this week, Chip?
Well, I did something kind of exciting after your insistence that I try it, and I invested in my first option.
How was it? Well, first, which option?
That was a bit of SoFi, which we spoke about last week.
So you're rich now, right?
Well, I didn't invest very much. I decided to just dip my toes in with a
How,
$300 option,
how many
and
contracts?
just one,
Okay.
one contract, and I'm down 6.21%.
Oh, well, we're not down. We haven't sold yet. Hey, things will go up. That's what we
Right?
expect.
Uh-huh. Uh-huh.
How was buying the option? Did you find it easy? Was it confusing? What was your overall step like process? You used Robinhood, right?
Yeah, I use Robinhood, and honestly, most of my investments are through kind of standard traditional accounts, and so I don't often play with consumer grade investment tools like Robinhood. And the UI is fantastic. I have a background in technology development. The UI is fantastic. The user experience is phenomenal. You can tell that this tool was designed to make it as easy as possible for you to lose all your money.
that that is a fair assessment. But getting the option, securing it, you thought it was pretty easy overall. Didn't take you that long.
Oh yeah. No, it was super easy. And it was fun too. Like I can see why people start to do this.
It's scary when someone says it's fun.
Yeah.
Um,
I mean, you gotta
but
swipe up. Like that's clearly a mechanic designed just to like hit a dopamine high and some.
so on the screen, I actually have your option here. So you bought this. You bought this on Monday,
Mhm.
and your break-even price is $17.90. SoFi is below, just below $16, I think, right now. Today was not its best day, and your expiration date is in March. So we've got some months for this to rebound.
Yeah, and this is a good opportunity to play with developing an exit strategy. Like this is something I would do if I was considering getting involved in options trading, which it's not my cup of tea. I prefer more stable investments. I prefer like an ETF. I prefer an index fund. But I think if I was gonna do this, I
Boring.
would start. Yeah, I would start with this, like a $300 position
Yep.
to get a feel for the strategy, right? Like I don't have a good idea right now about when I will exit. I assume that between now and March, I need to think through what percentage of a return I'd be willing to take if it reaches a certain point, what my exit strategy would be, when's the drop dead date for when I would sell it, regardless of the profit margin.
Well, and also having exit strategy the opposite way. If it starts trending downward and you start losing more of it, what's your stop loss? Where do we cut? If we get down to this contract's only worth $100, is that your cut rope and leave situation, or where do we? You have to have the line both ways, right?
Mm.
This is where I want to get out profit wise. This is the maximum I'm willing to lose.
Yeah, that's a good point. I think that it's important. I'm sure folks who would be interested in this type of thing have an understanding that it's important when you're looking at options to reverse any sort of strategies you have for long-term investments. With long-term investments, I check the market every 6 months. I don't really care, right? Because I'm playing a 45-year game. Whether or not it's up or down makes very little difference to me today. But with options, right, it matters. I would assume that I'd
Yes,
want if I was trading all the time, I would assume that I'd have a stopgap here, which you can put a stop order on this, right?
yes, yes.
Okay, yep, that is pretty cool.
Well, I think we will check in on this option for you each week, and we'll just see how it goes.
Yeah, and I think we spoke briefly about what I'm going to do with my unlimited winnings from this roll of dice, and we're just going to keep investing it in options and see how far we can get it.
You make it sound
Maybe we'll
like
give.
gambling when you say winnings.
Oh, sorry, return. But maybe we'll do something fun for the viewers with the money if we get it up high enough.
Well, I like that option. All right, let's take a look at my portfolio before we head into the space stocks. So this week, not such a banger week. Last week we topped out about 270K. Right now the portfolio is sitting about 257,000. So we're down a little bit for the week. Nothing too crazy. So let's talk about space stocks. There
I'm
are
excited.
three players that I'm particularly watching. We have Redwire, which I actually have a option contract in. I have one option contract in it. Redwire is trading right now at 13.32 a share. There's LUNR, which is trading at 11.93, and LUNR has actually had a really rough week. Earlier, a week ago, they were at 16.32, so they're down about 23% in a week. That's a rough one. And then we have Rocket Labs, and Rocket Labs is currently the big daddy of the space portfolio. This is the king of them right now. I would say Redwire is actually kind of like the smallest of them, although LUNR did take quite a hit price wise this week.
Mm.
So let's actually look at my Redwire contract.
And what does Redwire do specifically? Are they like satellite technology? I
So
don't know much about like
so all
civilian space.
yeah all of these all of them shoot rockets into space.
Okay.
And then they all focus on different specialties. I believe Redwire is they have a few contracts with NASA and the government. And I also think Redwire might have one of the lower success rates with launches. You know, sometimes with these launches, they don't work out the way you want. They blow up on the ground or on the way up. So launches aren't always successful. I think Rocket Labs does have the best track record with that. So definitely, that's a little risky having a space company that doesn't get to space all the time.
So we're I know of just like a few household names for space companies, right? Like SpaceX and is Blue Origin Jeff Bezos's
Yeah.
uh little baby as well. Are those not publicly traded?
I don't know about Jeff Bezos one, but definitely SpaceX is not a publicly traded company yet. That's
Oh,
this in. I actually think everyone is buying these space stocks because they want to be in the space field, and SpaceX isn't a public company yet. Although
interesting.
there is talk about it becoming a public company, and I think the market cap they're talking about is like $250 billion. So it will come out the gate as a very expensive company. And with Elon behind it, I mean, the premium on that company will go to the moon.
Oh, jeez.
So for my Redwire position, I paid. Let's see here. We paid $3,750 for my option November 21st.
Okay.
So 3 weeks ago, basically, we did 30 contracts, which is 3,000 shares. And right now we're up about $3,450. This has fluctuated a lot. Earlier, I was down to 2,000 in profit. I've been up as high as 5,000 in profit. This stock moves everywhere. It's open until February, so we still have a lot of time left on this. But we do want to think about. We are getting to the point where, like in early January, we are going to exit this position because while these are good companies for some short term returns, I do not see these as long term companies. All three of these companies are burning cash. None of them are profitable.
Hmm, okay.
So definitely, I would not look at these as long term plays. Um,
Are,
I,
are all of these functionally government contracting companies, right? Because what sort of public entities are shipping stuff to space? Just maybe cable companies and satellite companies, like
yeah,
Comcast?
satellite companies, internet. A lot of there's SpaceX. That's their biggest. They're shooting their own satellites into space for
Starlink?
Starlink. Thank you. Yes. Um, so they're all shooting different things into space. But the real key is what's the success factor? Every time you put a rocket on the platform and it doesn't make it to space, that is a big loss because you're losing the payload, you're losing the rocket, you're losing time. And I think that's really one of the reasons SpaceX has become the king of this space because they get to space and they don't lose their rocket. Their rockets, they land back down, they can reuse them. So everyone's really waiting for SpaceX. These stocks, I think, are filler stocks, is the way I'm looking at them. So if you can get in here and make some money on them in the short term, do it. But I don't know if I'd be putting cash in for the long haul.
Are these acquisition targets for other companies right now? Like, are there other large corporations interested in dabbling in space industry?
I don't know if they're acquisitions for other companies. They might be acquisitions for each other. But the biggest problem is they're all just burning money. I mean, they're all really negative cash. Their P&E is just really bad, and they're definitely not profitable. That is a big problem right now. And SpaceX is extremely profitable. I think they're one of the government's biggest space vendors. They launch everything, and the fact that you can reuse the rocket saves you a fortune. So these are the three space companies: Redwire, Lunar, Rocket Labs. I would say the safest bet is probably Rocket Labs, although it is on the higher side right now. I don't know if I would get into Redwire or Lunar if they get much more expensive. I think that shows with Lunar. They were at $16 was one of their high points, and they got rejected pretty quickly. And to the tune of 24%, that's a big knockback.
What's their year look like?
This year they're up 261%. The last year's been pretty big for them. But every space company since the election has really, I mean, if you look here, you can see right around the election time, this company just took off.
And is this just politically driven because of Elon Musk's relationship with the upcoming administration?
I think the whole market is really excited about Trump just becoming president again. And I think most stocks have just taken a 5 or 10% increase because of Trump. The whole market's up. We're at record highs all over the place. So I think at some point we're going to see some leveling out. I think some of these stocks have gotten a little too expensive for what they are, and maybe Lunar is one of the first ones that's getting brought back down to earth.
Okay.
So we'll keep an eye on them. So we got Redwire is my option. We're gonna watch this one closely. January's time frame to get out. We're trying to double our initial investment in this. So if we can get out of this for around 7,000 profit, that's really the goal.
Okay.
And that's it for the space part. Coming up on Monday, what do we got, Chip?
We've got a discussion surrounding whether or not buying a house is a better financial decision than renting and investing the difference.
What do you think? What's your current thoughts on that? And I'm assuming you haven't done any research into this, right? We even have had a few conversations, but have you looked into numbers at all?
No, I Googled it briefly today, and I'm going to work on some numbers over the weekend. I think that my gut says that there's really no way that buying a house is the financially optimal direction to invest your money, right? Because there's no way that home ownership. I'm a homeowner. You're a homeowner. It's expensive. There are a lot of expenses that aren't talked about when you first purchase a house. Both of us have sold our houses before paying them off and purchased new houses, like many Americans do. I don't think it's possible that buying a house is more financially optimal than renting and investing. I'm curious to find out if that's true, though. There are other components to that, right? Like raising a family in a rented house might be more difficult than owning a house, but I'm curious to talk through it and see what the numbers say.
Yeah, it'll be curious. I'm also curious to see factors like interest rate. How much does that make a difference? If you have a lower interest rate, is it more worth getting a house versus if you have a higher interest rate? So I am also very interested in that. So Monday's episode will be a good one.
Yep.
So I think that's it for this week on Bull vs Bear, and we will catch you guys next week.